You are listening to chartingwealth.com for Tuesday, the 19th of September, 2017. Note to all of you, please, we are traveling tomorrow from the East Coast all the way to Hawaii, Maui to be exact, for several days, and it is going to be very difficult to get the show out in a timely manner for the Wednesday broadcast. We will be doing our best to make that happen, but I think our total flight time's like 13, 14 or more hours. So we're supposed to get in Hawaii around 5 o'clock local, 5 p.m. local, and we will try our best along the way. Perhaps in Los Angeles we can do the show. So please bear with us. We are traveling. We should be able to get everything out in Hawaii the entire time. But thank you so much, and we appreciate your understanding. What's going on in these markets as the week opens? We get that first trading day done on Monday the 18th. We see that the S&P 500 up 0.20% for the day. The Qs started the week down 0.34% down. TLT, the 20-year bond fund, down just over 0.5% at 0.57%. Gold down the most, 0.94%, almost 1% down. So let's start first with the only chart up for the day. That's the S&P 500 going into the fourth week of up movement. Now again, this first day of the 5-day candle is not anything to get overly excited about. Lots and lots of things can change. It's just the first, so it's 1/5 of the candles just been drawn on Monday, but we see the derivative oscillator continuing to lose energy, and it appears that the price percent oscillator is getting closer and closer to crossing over, going up on that red signal line, still in a confirmed down move. However, if we look at the 2-day chart, what do we see? Well, it crossed over going up back on the 12th, and again, moved up considerably over those two following 2-day candles, the one ending on the 12th of September and then the 14th. But as we look at what things look like over the course of the day, and again, these are Heikin Ashi candlesticks. They're drawn differently than your typical open, high, low, close candlesticks that you see on the traditional Japanese. If you don't know what we're talking about when we say Heikin Ashi, it means average pace in Japanese. We have a great training at the website chartingwealth.com. Check that out. Everything you need to know. It's probably the best training we've ever done. Heikin Ashi candlesticks at Charting Wealth under the training section. But we see that we have a red, well, I wouldn't necessarily call it, maybe a spinning top, close to it. But lots of up movement on that candle, a little bit of down, and a red open box. So again, just watching that, we can see that on the 2-day chart. Again, what do we see happening there? Well, of course, things ended on the last candle on the 14th with a lot of up movement on Thursday, and then this latest candle for Friday and Monday shows a decidedly different point of view, actually closing below the 2-day trend line. Derivative oscillators maintained, it's not increased its energy, and the price percent oscillator slackened off a little bit. So just keeping an eye on that. What do we see on the 4-hour chart? Again, lots of down movement in the morning on the 15th. That was on Friday, and there has been some up movement since then, but none of that movement has gone above where the down movement started. So again, a sideways slide is what we call that. Crossover going down actually in the afternoon on Friday, and still in a down move, and the price percent oscillator actually slanted over going down even further, and the derivative oscillator. So have things topped out on the S&P 500? We will see. We'll continue to watch and see what we see. And again, remember, we use Heikin Ashi candlesticks. They help you track the average pace of the price action a lot more effectively. So let's keep moving through. We see the Qs, like we said, down 0.34%. 3 weeks of up movement until we see things start off on this first day of the new week. We have a red open box candle, price movement below the 2-day trend line, and we'll continue to keep an eye on what is going on. Of course, price movement is still well above the weekly trend line. That's a confirmed down move. And again, derivative oscillator continuing to lose energy. And we see the price percent oscillator just again in about the same place it's been for the last 3 weeks or so. As dig a little deeper into the 2-day chart, what do we see? Well, that 2-day chart, of course, crossed over going up back on the 1st of September. And look, price movement's never gotten higher than it was back on the candlestick from the 1st of September. What's that telling you? Things are sliding sideways. Price movement closed below the latest 2-day trend line. 2 days still in an upward move, but really slipping sideways for quite a while. We'll continue to watch. Again, all things being equal, the market tends to move in the direction of the largest chart. And we see for the course of the day on the NASDAQ 100, that is the Qs as we affectionately call it, we had sort of a spinning top in the morning and then a down move in the afternoon, touching on the 2-day trend line. We can see an acceleration in the down movement in the afternoon on the derivative oscillator, and we see that the price percent oscillator crossed over going down all the way back at 4 p.m. on Thursday the 14th. So again, decidedly downward momentum, it appears, on the Qs. We'll continue to watch. If and when we have a trade on the Qs, we will let you know. Do we have a trade yet? Possibly no. The 2-day chart, excuse me, is still in a confirmed up move. So until the 2-day chart matches the weekly, no movement. We'll continue to watch that. What else is going on bonds? Well, of course, on the let's see, we want to go to the weekly chart, of course, first. The weekly chart, we've seen coming into the second week of down movement after this beautiful, what do we have, 5 weeks of up movement, and things did very well for us. Remember, bonds still in a confirmed up move going all the way back to February. And we see now going into the second week of down movement, derivative oscillator losing energy. Price percent oscillator seems to be coming closer to a crossover going down, but it's just the first week of a 5-day week, so we'll make no call at this point. We see on the 2-day chart, 3 2-day candles, 6 days of strong down movement. Crossover, of course, going down on the 2-day candle back on the 14th. And of course, we need to signal that by marking that crossover going down and adjusting our down arrow. Beautiful thing about the free stock chart software is it is so gorgeous. Those of you who want to use it, please, if you're using a Mac, make sure that you use this software that is, or this app, freestockcharts.com, in Safari. Okay, so we have 3 days of down movement so far. Let's check out what's going on the 4-hour chart. Of course, it's been going down since the morning of September the 11th, the prior Monday. So again, continue to see down movement. Don't have a trade yet because we're waiting to see what's going to happen with the weekly chart. Will it cross over going down, or will the 2-day and the 4-hour cross back over going up before that happens, and perhaps we'll have an up trade? We'll wait and see. Remember, we are trend followers. We're not forecasters. Forecasters get slaughtered in this business. Trend following is the way to do it. That is what we teach, plain and simple. The weekly chart, what do we see going on gold? We see that gold is still in a confirmed up move, although like bonds the last 2 weeks, decidedly downward momentum, but no crossover going down yet on the price percent oscillator. Seems to be headed that way, but a big gap still. Derivative oscillator still a lot of upward energy. We look at the 2-day chart getting close to crossing over going down. Hasn't happened, but it has blown through, of course, first the 2-day trend line, and then over the last 6 days, it is now, looks like it's getting ready to pierce the price percent oscillator, and boy, the derivative oscillator dropped off strong on this last 2-day candle. Of course, what does our prescient 4-hour chart tell us? Remember when that crossed over going down back on the morning of September the 11th? It has continued to trundle down since then. And of course, over the course of the day on Monday, the 18th, it crossed through the weekly trend line. So that 4-hour chart, when it works beautifully, doesn't it? If you would have seen that and jumped in somewhere in the afternoon on Monday, at the opening at 127.35 down to 124.25, actually a low of $123.97, almost $4. Again, how do you deal with gold in a down move? You can practice a put option, of course, in GLD. And there's also some, again, scantily traded inverse funds in gold. They aren't the best. But again, you can just pull out and wait for gold to turn back around and move up. You don't have to make money every single way. But again, it doesn't hurt to do that. And again, when we talk about money, we talk about practice trades. We're not talking about using real money. Once you master these charts and you develop your own style of investing and or trading, you can make up your own mind how to spend your own money. We are not a stock calling service. You don't pay us for anything, much less for any market advice. Thank you so much, my friends, for being with us. If you have questions, problems, concerns, let us hear from you. Don't forget, we're going to be sending out tomorrow, whenever we do get the podcast out, please make sure that if you want to receive all 3 of those mindset trainings, we're going to send them out again to you tomorrow for the Wednesday broadcast. So make sure, if you are listening at YouTube, Facebook, Twitter, however it might be, and you are not a subscriber at chartingwealth.com, if you want to receive that mindset training, you need to be a subscriber. How do you do that? You go to chartingwealth.com, put in your first name and your last name if you want. Don't have to have that. And your email address. And for free, we'll sign you up with those emails every day that the market's open. You'll receive our video. In addition to that, you will receive, and that is the daily market review, you'll receive links to the How to Read a Stock Chart video, to the layout that we use at freestockcharts.com and how to set that up on your computer for free. In addition to that, the trade worksheet, the daily market worksheet, and the weekly market worksheet, and anything else we can think to throw in, all of it for free. God bless, my friends. All the best from the entire team here at chartingwealth.com.